to know, in like bad times when you end up doubting whether the system works, whether it can actually be done, give you enough conviction that it can be done if it's done correctly.
Hello everyone and welcome back to another TFT interview. Today I'm joined by Marcin, who comes from Poland. Welcome, Marcin.
Hello, thanks for having me.
I'm happy to have you here. So can you tell us first a little bit about yourself and what got you into trading?
Sure. So I'm only actually trading as my side sort of hustle. I have a full-time job as an engineer. What got me into trading? It's actually a little bit of a long story. Initially, it was March 2021, I think, when Tesla announced that they would be accepting the payments in Bitcoin for their cars. So there's this huge spike of like 60K over for a single Bitcoin. So I was like, okay, let me get involved in that, right? let me get my feet. So and I ended up looking for ways to get involved, and it was further I guess ignited by some kind of clickbait YouTube videos that more so than not would be mostly sort of kind of Armageddon-like scenarios where they tell you that fiat standard is over and we're moving to one and only chance for our freedom in crypto, and it will soon go to the moon. 100 million and over for Bitcoin. But when I actually started looking at the industry overall, as I had very little chance to get to know this. Prior to that, not much interest. I looked at a couple of exchanges. Where do I set up my crypto wallet? Like one of the exchanges that had the reputation of being one of the most trusted in the industry was up and running for like half a year only. Okay. Located offshore. Like on the Bahamas and so on. This is apparently one of the most trusted. With all due respect, I know that now that I'm more educated, I know what's behind crypto, and I don't want to say much negative about it. But back then I didn't want to set up a crypto wallet, so I just went to my broker. I assumed, okay, let's open some small position and get to know it. Maybe I can end up having it open for a longer while on a small leverage, right? And it actually was 7-1. Tesla announced that they are no longer accepting the payments for their cars with Bitcoin. So the Bitcoin crashed like 40% in like a week or so, and it started ranging between something like 43K and slightly below 40K. So I was like, okay, well, if I just sell it here and buy it back here, I'm gonna make money soon. Yeah? And there was some beginners like involved, and so I ended up making some money. But then it started falling below, 40K. So I was like, okay, I don't know anything about it. It might go, might as well go to zero. So maybe I should quit this position. And okay, I ended, up losing a little bit of money and educating myself. So I read and I ended up, assuming that I'm better off, since I'm sort of involved in other ventures as well, I'm not gonna be able to do it full time, be at the charts, do the diligence, the work that is required and, to do it. So I would prefer, as I read also, Buffettology, all sorts of stuff around, Warren Buffett investments. I read Market Wizards, I read Benjamin Graham works, so, around the type of decisions that they get involved in long-term investment. They ended up, with my money, just buying a bunch of, Apple, Microsoft stock and just leaving it there. When you look at the yearly chart, you would have, consistently 5 to 15% yearly, with some spikes of like, COVID and the type of market panic that happens, from time to time, but generally year to year, you would have 5 to 15% return. And I ended up just keeping it, not getting more involved in that for like half a year. But apparently the book recommender system from the place where I get my ebooks remembered it, and they recommended it, to me, the book called like Black Book of Forex Trading, something like that, from Paul Langer, I believe. And it is a relatively short book, like a pamphlet more so. It has some, introductory notes to Forex. I didn't know Forex before. Some notes, I believe, on risk management, like trade management, and so on.
Yeah.
And it has like 3 very concrete, specific sort of propositions for setups for swing trade, intraday trading, and scalping. And it briefly discusses what each of them is. So for scalping, they had a setup. Like very simple one with Bollinger Bands. So I end up having Bollinger Bands on my charts till this day, just because I got used to it. It's like an artifact, but it's hard to get unused to it once once you've been using it for a while.
Yeah.
Like hard to see the charts for differently when you take off the indicator and using for like a year or so. And it was very, very straightforward setup. Like if it pierces the upper band, or lower band on the 5-minute time frame with this and this much pips, so you use this type of stop loss and this type of position sizing. And that's it. So I opened up a demo account, and I traded for like 3 days in it. Apparently it works on a euro dollar, because they also recommend the euro dollar as the lowest spread and decent daily range in London and New York. So I just traded that for like 3 days. I made like more than 5% on this demo account with this type of methodology as described there.
Yeah.
So I'm already in my Excel spreadsheet, right? Thinking, apparently with like compound interest, I'm gonna double this account in a couple of weeks. I'm gonna be a millionaire in no time, right? So the 4th day, what happened is, as I mentioned, I've been trading for 18 months now. So I started in January last year. And in January last year, we had not even the first interest rate hike, because it happened in March, but it was an interest rate announcement in January. And the euro dollar went like 120 pips in less than like 12 minutes, which was more than, the range that it did in the previous days. So it's a demo account, so I don't have to use a stop loss, right? I might have used this methodology as they said, or I might not set up the stop loss. So I didn't even close this, and it recovered this, 120 pips in next to 3 days. So I didn't get punished there, and I continued trading like this. But I learned that there's this thing called economic calendar, where you have to look for those high impact tips, right? So that's how you learn. But I think from time perspective, I probably didn't trade on the demo account long enough. It would save me some money if I actually admitted that if it actually takes me out of the stop loss, or I should have set up a stop loss in the first place. That means that there's some work to be done on the system overall.
Yeah, I mean, the thing is
but
that
I just wanted to get involved.
Yeah, many people that trade on a demo account, because personally I didn't trade on a demo account long time either. But the thing is that many people, when they stay too long on a demo account, they don't have any emotional attachment to the money that they trade, which makes them develop bad habits, and it's really hard to get rid of those bad habits when they transition on the real account. So it's not good to recommend people to jump on a real account, but if you have backtested your system and if you have seen that, okay, this strategy is a profitable one, then I think that the best thing is to go and open a small live account that you're so that you can get the real feeling of how it is when your own money are involved. Because when it's a demo account, you don't care if you're gonna blow it or not.
Psychology is in there.
And the thing is that psychology usually
no psychological pain of losing money, right?
Yeah. So did you have any mentor, or you learned like everything by doing and studying by yourself?
I continued trading this. What happened, to be more exact, is that a couple of more times I would be stuck in the losing position but I didn't want to, close it or, do anything about it. So I just opened another demo account, not admitting that it's actually going my way, right? So I ended up having like 4 demo accounts before I went to the live account. And the evidence was there that the system isn't working. So maybe I shouldn't be going to use this live account. So, but I went and I continued doing the same thing that, that happened on the demo account, which is not closing my losing positions.
Yeah.
So what you do is, you are stuck in a losing position over the weekend, right? Which I shouldn't be in the first place. But you go through all the sort of different forecasts on YouTube to confirm that it's gonna reverse, right? And like that, I actually, I ended up finding this kind of mentor. But it's not like kind of like guru or kind of, the Switch Wave channel that I mentioned. What I just simply noticed is just that their forecast had some, sort of, admittedly quite impressive accuracy. So, and, I remember, specifically, when they said, I was in this losing position and they said, EU is just gonna push slightly a couple bits lower and then it's gonna have an impulse towards the ups. And it did exactly like that, moved like exactly like that to the peak. So it's like, right. You can just not discuss it any further. Just assume that this is what some people know it and others don't. But it got my attention that apparently market is this thing that can be not predicted maybe, because that's sort of you say that you can predict the market, you get punished, learn your humility the very next day. But it can be apparently forecasted with some decent accuracy, consistently. So apparently this thing, whether it's just actual human psychology that drives the market, greed and fear, as they say, two strong psychological forces that drive the market, or it's something else, this invisible hand, this like interbank price delivery algorithm, whatever it actually is that drives the market, the fact of the matter is that it apparently can be forecasted with impressive amount of accuracy, like to the pip. So that caught my attention, and I thought, okay, apparently these people know something that I don't. So I ended up following their channel, ever since.
What was the name of the channel?
We trade waves. So as I mentioned, they use this kind of combination of Elliott waves, Dow theory, the smart money concepts, with like a single indicator for entry or something like that. But it wasn't like my mentor that I took their course. I just ended up observing that their forecast from then on, and still testing my own different types of strategies, learning about all sorts of different indicators and working with them. Like a long time, I was just trading RSI, the simple stuff, the overbought and oversold, but backtesting it on different time frames. As I mentioned, the most recent one was the stochastic that, with a 1-to-1 risk to reward ratio, 60% win rate, that gives you at least two setups a day. So, as I said, the logic was that if it gives you 30 setups a month, 60% win rate, you would end up making 8% a month with 1-to-1 risk to reward ratio, which is enough to pass the challenge. And it was based on the simple stochastic that I sort of, it was inspired by some, YouTube guy with their own setup, but I went and practiced it for myself. And I can tell you that I'm not sure whether there is a lot of high quality kind of setups that you can find on Reddit or YouTube just like that. Either you come up, if you look for 70% win rate, regardless of like 1-to-1, 1-to-2 risk to reward ratio, you probably come up with it yourself, or find a guru that found it previously and you learn from him, or I don't know, people. As we talked, you took, for example, this ICT setups, and I assume there's probably some things that you added from yourself, and you do,
Yeah, I think that everyone is like learning so many things, and they have already previous knowledge, and then they come and learn another model. So it's most of the people are developing their own model that is similar to the model of the mentor that taught him them the model. Usually you never trade identically the same, because we are all different and we see price in a different way. We start like building intuition the more we watch one pair. So I think that you can never replicate what someone else is doing. but you
right.
can like
and also what
you can understand the idea and try to develop a similar idea that will make sense for you. That's what I think.
Yeah, and also I think that there is an aspect of it that you kind of have to find a setup that suits your psychology. Because, for example, as I said, one of the most tilting things to me was when I was taking out from a winning trade, not getting towards my target, then being taken out at break even. If it happens 2 or 3 times in a day, you just end up being really tilted. Yeah, so and you revenge trade and so on. So knowing that, being aware that this is an issue for you psychologically, you might end up tweaking your strategy or like your trade management such that this thing doesn't occur. That's why the setups that I mentioned with stochastics, I went for 1-to-1 because if I went for 1-to-2 risk to reward ratio, first of all, I couldn't find this kind of setup in my backtesting. I was like 1-to-1.5, 1-to-1.2. But then if you go to the market and it end up doing this thing that kills you, getting taken out at break even, I was like, okay, I will take a lower profit, but as long as you have a positive expectancy, that's more than sufficient, and you don't get psychologically damaged and tilted. So you don't use discipline and all this other stuff. Yeah. But coming back to your question, whether I had a mentor, I guess I didn't. I read a ton, and now I'm actually I would consider this channel that I mentioned as my mentor. As now I think that they have a better expectancy than what I was doing, than any kind of setup that I ever managed to find. Mm-hmm. So I want to learn their concept. I'm not consistently profitable with it yet, but I'm learning this concept and also going. The thing that I'm working with right now is, as we were sort of discussing earlier, as I said, I saw the statistic for prop firm, success rate published, maybe it was from TFT, that this percentage of people pass the first phase. Out of those, this percentage of people pass the second phase. Out of those, this percentage go to the payout. Then they mentioned a couple of general sort of not specific statistics, but observations. That I remember specifically that they mentioned that people that trade gold, which was the majority of the traders, are better off when market is slower but not dead. Which is like, if you trade gold, you know what it means. Like it's so freaking accurate, because the most money you would lose when you're on the wrong side of the impulsive move triggered by some kind of event, hang back to source. But the final statistic that they said is that people took bigger payouts the less trades they opened, during the trading period. So that got me thinking, and if that got me thinking towards having this kind of mindset, that maybe the way to go is to not aim for having 10-20% payout on a monthly basis, but having like 3% is more than enough if you have decent enough account. And then it's also psychologically more stable, because if you know your expectancy, you know that even if you go towards a drawdown, like you can assume that with this 65% or 70% expectancy, 1-to-2 risk to reward ratio, even if you go to worst case, say maybe it's like 4% drawdown for you, you hit 2 winning trades. Sure. It might happen in 2 weeks, it might happen in a month, but you don't blow your account and you end up making those 2 or 3% monthly. And this is already a very decent profit from 200K or account. Yeah, exactly. And it's not stressful. It's not like a roller coaster of emotions when you start. Here I can tell you something as well, which is that recently I've been sort of also admiring the what's his name? Larry Williams, of course, Larry Williams, which he owns this trading cup, and he was mentioning that early on in his career, someone told him that, Larry, the way to make money in this industry is not by over leveraging, but by having a small enough position, you're able to ride those big moves. And funnily enough, he says that in a podcast that I watch. And then he ended up, next thing he does, he recommends this book called Zurich Axioms, which is about the Swiss bankers from Zurich that ended up developing this line of like 12 big rules for general rules of thumbs for investing. And you would think that, these Swiss people are sort of more on the conservative side. So they will be more maybe like risk averse. Maybe they find some, epic ways of hedging their bets or something. But the very first axiom that you read in this book is like, along the lines of, if you're not worried about your trade, it means you didn't risk enough, right? which is crazy, which is exactly the opposite of what Larminus said. But so I thought, that's not for me. I'm over that. I've been in this industry long enough, 18 months, but I already know that this is psychologically not a stable way to have longevity in this in this business.
Yeah.
And I can tell you that definitely it's a huge sort of psychological relief when you're not constantly worried.
And the risk tolerance for everyone is different. So you cannot like try to do what someone else is doing because your risk tolerance might not be as high, or you can like compare your risk tolerance with someone else because we are all different and we have to find what fits our risk tolerance. Some people have a crazy risk appetite and they can risk a lot without stressing about it, without like worrying about it. But some people might stress over a very small a risk that you might not consider as a risk. So that's why it's like really, really different. You got a really decent payout. What kind of risk management do you use on your funded account? And do you use like different risk management on challenges in funded accounts, or you use the same?
Sure. So it's developing and progressing and changing now. But for the payout that I got, it was, as I mentioned, 1-to-1 risk to ratio. I was risking 1% per trade. But as I mentioned, the right times, I move my stop loss, right? So it would be more than 1%. But with the perfect kind of discipline, it would be 1% per trade with 1-to-1 risk to ratio.
You do the same on the funded as you do on the challenge account, right?
On the challenge, yes. But with the challenge, as I said, I got a little bit lucky also, because 10%, as I said, with this type of methodology, right, that I outlined, 1-to-1 risk to reward ratio with, what I described earlier, that it would grant you a best case 8%, right?
Yeah.
You have to get a little luck. So I ended up, having a strong bias towards where gold was headed next. Just prior to the news, issuing a stop loss, a stop order. So not a limit order, just a stop order, just slightly in the vicinity of where it was trading at just prior to the news, and then pushing like $10 in an instant. Now, this I would not recommend, because it doesn't do that always. Sometimes it wicks you in, just takes you in, and does the exact move on the opposite. So obviously that's the easiest way to blow your account, right? So I did get a little bit lucky. In general, those kinds of challenges that the standard has 10% target. Those kind of challenges that have 8% target, this is a decent risk management. And even if you don't make this 8%, or you might do some tweak to it, where once you get to like 4 or 5%, you end up risking 2% per trade, just to push towards higher percentage. But for those challenges, if you want to go for like 1-to-1 risk towards, you could, even if you don't make a target, you get a retry, right?
Yeah.
So you might, end up having to be infinitely patient for like a couple of months, but the discipline and so on, right?
Yeah. What is your plan moving forward with trading and like maybe in general, like other side hustles that you have?
So I ended up going into it because, with this book that I mentioned, this Black Book of Forex Market, it contained this promise of trading being, a way to achieving, financial freedom, financial independence, right? So that's the ultimate target with it. I think, because one thing, maybe I can mention a lot of books in this interview. Maybe one that isn't about trading, but is hugely like relevant to wrapping my head around like psychologically the whole venture. Ray Dalio wrote a couple of brilliant books, right? The most recent one, like Principles for the Changing World, is like beyond, this. Can't even begin to describe it. He also has this animated, version of it on his YouTube channel. It's like 40 minutes long, which kind of decently summarizes, the book. I hugely recommend it. But he also has an animated version of his first book, which was Principles, just in general. So these are like principles that he has like a couple of sections, like principles for life, principles for like how he manages his hedge fund, and and others. And he has this idea of like progressing through life as an evolutionary kind of process, where you set up like this big audacious goal. You formulate a plan how you're going to get there. Then you go and try to execute the plan, and you encounter reality. You get crushed by reality, and you have to reformulate the plan and look with this new improved kind of way, with new information at what is actually the realistic kind of goal, and reformulate the plan. And it goes like this kind of spiral where you just get more informed, because what do you know when you start, right?
Yeah.
You don't know much. So it's like, and it's quite instructive, because once you first start and you see that you can make like 4% a day, you can make like 50% a day if you're like over leverage, right? Then what would you even consider a realistic goal? Can you double your account in a year? Surely you can double your account in a year. You don't have to have spectacular sort of early kind of results to acknowledge that. Can you double your account in a year with decent risk management? That sounds realistic, but at first you probably sort of more greedy, and you think like, maybe I can quadruple my account. Maybe I can 100x or 10,000x my account. Is that possible? Well, Larry Williams, as I mentioned, did it on this trading cup, but is it likely? Is it is there a way to do it with maintaining this kind of stable psychological state throughout this year? Well, that's a different issue. So as I progressed after this 18 months, what I would consider possible and within the realm of maintaining stable psychology is aiming precisely at like 3% a month with having a funded account. So this funded account, I have at 200K. I might end up, aiming for another 200K, or just end up scaling this one. And gaining 3% a month from that is, I would consider, more than enough. With risk managing accordingly, because there's always this temptation to go for more funded changes. Maybe I can, there are certainly traders that have like a couple of millions, right? Under their management. But that I would start considering, when I have a sufficient confirmation that I have all the issues fixed, all the system, working properly.
Yeah, when you see like
that I'm actually consistently profitable. Because now, there's certain amount of humility required to admit that, I end up pulling up this very, very decent payout, but towards becoming consistently profitable, there's probably some way to get there eventually, right? Because I don't think I'm there yet.
And it's good that you are aware of it and that you're honest with yourself, because many people try to lie to themselves and rush the process, not admitting that they are not consistent just because they got a payout or they saw some good results within a week. Okay, we will have to round it up. Any last words that you would like to share with us?
Yeah, maybe just some final rant about about what I said earlier. That realizing what is realistic in this industry, it's like some early beginners, like maybe some kind of early success in this business, where you do get a couple of percent of a couple of not even disciplined kind of trades, can give you enough conviction to know, in like bad times when you end up doubting whether the system works, whether it can actually be done, give you enough conviction that it can be done if it's done correctly. I heard a bit of a discussion about it, that some early success that is undeserved can be very detrimental, right? Because you might assume that you have some kind of talent or special ability, and then you ended up receiving it because of that. But on the flip side of it, if you have some kind of early successes, then you end up failing tremendously. And you end up doubting whether it can be done. It's important to have this kind of conviction that I just have to figure out a correct kind of system, and this, if done correctly,
it's
it
going to
can be
give
achieved
you
automatically.
consistent results. Yeah. It will be really cool to have you again in the future to check on your progress, to check how things are going. And thank you so much for your time and for sharing your experience until now. You are still like very early into this field and you have already shown some results. So this is a really good sign. So just keep pushing, and it will be my pleasure to have you here again in the near future to check how everything is progressing.
Thanks so much for having me. It was a pleasure.
Thank you. To all of you watching, thank you so much for watching. Don't forget to hit the like button, subscribe, hit the notification bell, and let me know in the comments if I'm missing questions that you're curious about. Trade safe, and until next time.